Good morning, everybody. This is the third take today because my CPU has been giving me a headache, messing around with the stupid old fans. So the recordings actually were all horrible because my CPU was overheating, the fans weren't working properly. So I've had a bit of a headache sorting it all out. I'm actually building a new liquid cooled PC, so that's going to be a lot better for me to use, because I'm sick of this old machine now. It's rubbish. So without all that, I won't go into all that. We're a day late today. It seems that every now and again we push over a day late because I've been busy the past couple of days. It's Wednesday, the 9th of November, 11 o'clock in the morning. I did start all this at 9 a.m, but it's taken so long to record and edit, and yeah, I'm having to do it again. But anyway, let's get to the charts. As first, as always, is EURGBP. I've already drawn a lot of drawings on all the charts, as you'll see, because I've done this 2 or 3 times now. So it's probably going to be a little bit of a quicker video. I'll just go over everything what I've already had a look at today. So as I said, over the last couple of weeks on EURGBP, it's not been in a nice place where I want to take a trade. We did go bullish. We looked like we were going bearish. But as you can see, this demand zone held. We did break above, and we've just previously broke above that high there. But as again, it's just squeezed into this corner. We're back above this trend line. It's not in an ideal place where I'd like to trade it. We want to see some clearer direction of where it's going. To buy, really, we want to see it as I've marked out here. We want to break above this resistance, and then we can look to buy in on the next higher low created before we continuation. Again, I was looking to sell because it looked like it broke below the trend line. It was looking like it was going to break below this, so I was looking to sell. But yeah, let's wait now and just let price show us a clear direction of where it's going to go before we join in on the trend. So it's a no-go for a trade for me at the moment for EURGBP. So with that covered, we'll move over to GBPJPY. And this is a bit of a weird one also. A couple of weeks ago, I gave out that trade to buy from this demand. We peaked at 542 pips with a stop loss of 176, so 3-to-1 risk to reward. You should have secured your profits at least when we went 1-to-1 and 2-to-1 in profit. So whatever you secured on that trade, it depends on how you trade. I will just move the opacity down on these because they're a bit high. Yeah, so however you manage your risk position once you're in profit, that trade is obviously finished now. So where are we going to move to now? Well, again, we could look to buy again from this demand zone if we get a nice 50% candle in this area for a very similar trade of what we had last time. Ideally, we want price to break a bit lower so we can buy at a lower price as we sit on this here. Meet the trend line in the demand zone and buy up higher to get a higher risk to reward ratio, or see price break above and then buy on a higher low created if we do continue on the bullish trend, which we have been in. As you can see, the moving average is pointing upwards now. So they would be my ideal positions to take on GBPJPY. So with those covered, we'll move over to EURAUD. Again, the past few weeks has been a bit choppy. We got that sell from the supply zone a couple of weeks ago. This demand zone that was created here has been broken. Price moved down. I'll make it a bit higher so you can see. Price moved all the way down. Touched this demand zone here and wicked right back out, and we had a 50% candle at this little demand zone that was created here. So this wouldn't be too bad of an area to buy. If you're a bit more risk adverse, then you could take a buy from this zone here and look to go up and break this supply zone. The moving average is pointing up very sharply at a nice bullish angle now. As you can see, we got the wick out and a bullish reaction, but it has been very choppy, so it is a bit more on the risk averse side. But yeah, if we got a break above this supply and this supply zone was took out, we could look to buy on the next higher low created, hopefully around this area, as it retests the broken previous resistance for now turn flip support. So that would be ideal on EURAUD. Yeah, so that's what I'm looking out for on that pair. With that covered, we'll move to GBPUSD, which is the trade that we're holding. We bought back at this 1985 demand zone previously. We've peaked at 885 pips. Currently we sit at 800 pips in profit. So we're well over the 2-to-1 risk to reward ratio. So as I always say, secure your profits. As in terms of trend, hopefully this wasn't a fake breakout. It looked like it was going to be because we broke back right down again, but it did create a higher low here, and then we've since had a bullish reversal. As you can see, we've had a higher high created here, a higher low, a higher high, a higher low, and then we want to see this next higher high created to continue in our trend and continue our buy positions. Today we've got midterm elections in the US, we've got CPI data coming out, so it's probably going to get very volatile over the next couple of days. So we'll have to see what happens with our positions, you know, regarding the news events. So as always, I mean, what I do is I just move my stop loss under the last swing low once we create a new higher high. So once this higher high was created, I move my stop loss under this swing higher low creation here, and then if we do break above and create a new higher high, then I'll move my stop loss under this higher low swing here and continue as we move on towards the trend. But if you don't want to go through the news events, that's totally understandable. Close your full position now for a nice 580 pips. It's nothing to be scrabbed at all. So yeah, so we're pretty much watching and seeing what goes on with the dollar over the next couple of days with this trade. We're just holding for now, but we're well in profit, so you've got plenty of space to maneuver, watching what happens with today's events and how they pan out. So with that pair covered, we'll move over to EURUSD. Pretty much similar to GU, with a higher high, a higher low, a new higher high, and another higher low created. We're trading above the long-standing downtrend. We're trading above the moving average now. Again, it's vital that we create another higher high to continue in the trend. We're currently at the resistance of the previous higher high created, but again, it's all going to be dependent on what happens today with the US dollar, with the elections and the data that's going to come out. So pretty much wait and see now to see what happens to join to get a trade on this pair. I did say for the past few weeks, once it breaks above this trend and the moving average, then I'll start look to take a buy on this pair. So it's possible that the dollar could go very short-term bearish for a day or two, and we get a little higher low created here. As long as it doesn't break below here, then I might look to get on a possible higher low created around here maybe. So yeah, that would be something to look out for, just in case the dollar does drop this pair over the next couple of days and then back up again. So that's something I would look for in EURUSD. With that pair covered, we'll move on to gold. This is a trade that I sent out on one of my charts last week. I think it was Thursday or Friday. Previously, we were buying from this demand zone here that got broken, and then price went all the way down to this demand zone and created a double bottom, gave a perfect doji 50% candle on the zone, and then shot back up again. And I was gutted I missed it. I think I said last week that was a perfect one for me. And it looked like at that point that gold was going to run away from us, but it didn't. We saw a drop back in price again, and last week it came in this demand zone and closed out and gave us a 50% candle right on the zone, which, as I said previously, if I had saw that, I'd have taken it, and I did last week. And then I sent the chart out that morning, so hopefully everyone, if you follow me, you caught that. because later that day price just shot up. It gave us a great return pretty much straight away. So obviously that doesn't always happen, but in this case it did this time, so obviously we've got to be thankful for that. As you can see, it's been very bullish over the last few trading days. Currently we are 811 pips in profit. We've peaked just over that at 870, with the risk of 148, so you know we're well over 5-to-1 risk to reward ratio around that level. So plenty of movement to secure your trade. Again, this pair could get very hairy depending on what happens with the news that's going to come out today regarding the dollar. So as always, just move your position at least to your entry. If not, secure 1 or 2% and then just let the trade ride. If it does come back down, then you've secured 2% or 3% if you wish, and then we can look to get on another trade. But hopefully this will be the push now before we see the December rally for Santa Claus and gold. Yeah, so hopefully we can try and hold this as long as we can, and give us a great return, because it would be nice for gold to turn bullish now for the lead up to the Christmas holiday periods coming up. Okay, so with that pair covered, we'll move over to the dollar. We'll just have a quick look. Yeah, again, there's big news coming out today. I keep repeating it, but obviously it's massive, so I can see the market's getting pretty crazy later on today, which is going to be good to watch. I drew these little zones out for a couple of weeks ago now. I think it was last week or the week before. These are going to be vital zones to see what happens. Price is meeting the trend line. It's respected it all the way up, as you can see. So if we break below that, then obviously the next support is this demand zone here. We are trading under the moving average. We've created lower lows along the way now. Price is looking bearish structure, but again, it's these support areas now which we need to break for the trend to continue going bearish, and then obviously it's going to be great for our gold and the GU trades that we're in. Today's candle is currently bearish, but again, that could all possibly change quite wildly later on in the day once the news comes out, so that's going to be something to watch. So yeah, so with that covered, we'll move over to Bitcoin, and look at that. Woohoo! We've had some massive movement. Yeah, I got stopped out on our position. I obviously removed it to my entry area. I moved it a couple of pips above to cover the swap fees, just so I didn't lose out on anything on any possible drops. And then we've had a very serious drop, 10-15%, even more. Yeah, so what is this? This is I think it's obviously due to the Binance and the TRX news that's coming out over the last day or so. Binance has sent a letter of intent to take over TRX, and buy up all the shares and crypto, and stuff like that. So obviously the reaction to that was not very good for Bitcoin. Or is it a total manipulation, and is this a sell to buy? We'll have to wait and see over the next couple of days whether this demand zone holds or not. But you know, these wicks tell a story to me, that there's a very big amount of buying pressure around at this area. So for now, we're just going to have to wait and see over the next couple of days, because it'd be silly just to buy in now, and then it breaks below, and then we do start to move lower towards the lower prices that everybody says we're going to go. If we are going to go, then surely this is the time, right? So hopefully over the next few days and the next week or two, we're going to see this zone broken and start trading underneath it. If it holds again, and then by next week we're still trading around this area, then I'm going to stick a buy on, again as previous, looking for the long turn in crypto. But yeah, you've got to speculate to accumulate, and if you don't, you'll miss it. So yeah, it is what it is. Didn't lose out on that trade. Obviously, as I say, as always, move your stop loss to your entry position once we move in profit, which you should have done once we moved up and we did get this break in the higher highs starting to get created. But yeah, this was totally unexpected. It came out of nowhere, and it stopped us out, which is not too bad because we didn't lose anything. So yeah, on to the next one. I'll just quickly show you Ethereum compared to Bitcoin. So if we have a look at June, when we did get this big massive bear drop, obviously Bitcoin has recovered a little bit, and then obviously it's pretty much moved sideways for quite a few months. But as you can see, we've broke below that low that we made in June. We have wicked out and we're still in this demand zone here. But yeah, well, let's have a little quick look at Ethereum. And as you can see, compared to Bitcoin, from the low in June that was made, we had the big recovery. I did buy Ethereum at £777. Quite lucky, because I did see it double up in price. But as I say, I'm holding long term. I'd like to get up to that triple price at least, to cash out my holdings in my wallet. But yeah, compared to Bitcoin, as you can see, price has not even nowhere near visited that low June, the low of June 2022. We had a good recovery, but we've had some nice tradable price action. We did move sideways for the best part of September, October, but then we got another push back upwards. And obviously that news that came out yesterday and today, we've dropped back down to this demand zone, but again we've wicked out and we haven't even broke the low of that wick there. So it's not looking too bad for Ethereum in a technical wise aspect. So yeah, we're just gonna have to wait and see what unfolds over the next week or so. So that's pretty much it for this week, everybody. If you followed me on the gold, well in profits, make sure you secure some profits now. Don't give your money back to the markets for whatever you do. There's going to be a big, well, I would imagine a big show today with the dollar and all the news that's going to come out. So it is nice being in trades, because it can wildly swing your profit and loss in one direction or the other. But as I say, there's no need to give any of your money back. Make sure you move your stop loss to your entry positions at a minimum. Cover your swaps and commissions, so you don't give anything back to the market. If you want to be less risk, move it to at least 1-to-1, 2-to-1 on gold if you want to take some profits just in case. You don't want to ride out the storm. And I will see you again next week. Cheers everyone. Take care.